playing havoc with consumer budgets, and the FMCG companies are bearing the brunt of it. With earnings season due to kick off next week, analysts now fear that modest volumes in the second quarter from the FMCG pack could perhaps bring in a little bit more of a dour note. What about margins, though? That's the big question, isn't it? Shivani Desai has been looking for some answers.
Inflation, high commodity prices, fuel prices all seem to have slowed down the pace of the so-called fast-moving consumer goods companies this quarter. According to analysts, FMCG companies are likely to post modest volume growth in the quarter ending September as the tide of inflation hits these companies hard. Analysts expect the FMCG universe to post a revenue growth of 16% year-on-year, largely driven by price hikes, but expect the margins to be under pressure due to escalating raw material costs.
So only soaps had depended on palm oil import. And to that extent, last year, yes, we had a cost push because of the palm oil price going up.
Well, we've seen pressure on our margins. They dropped in the first quarter. And that pattern will continue in the second. On the second quarter, in fact, we are sitting on even higher price inventories than on the first.
A few weeks back, Marico had apprised investors of the adverse impact of raw material prices and subsequent price hikes and had warned that their profits could be below expectations. According to IMRB, the number of new product launches in the household category dropped by 60%, while that in the food and beverages category dropped by 43% as compared to the same period in 2010. With most companies cutting advertising spends to protect margins, little was done to spur demand. But analysts remain optimistic for the coming quarters.
For FMCG, valuation-wise, there is not too much of a comfort level. Raw material pressures continue to be there. But I think in an economy like this, where you're not really expecting consumption to go down too much, especially for items like that, and the fact that they can possibly pass on raw material costs better, you have to, I think, have it as a sector that you continue to like.
Industry experts say that while raw material costs are pinching margins, companies need to do a fine balancing act of judicious price hikes to protect margins without hurting volumes. In Mumbai, Shivani Desai for ndtv Profit.
Now, what started as a rousing welcome has turned into a bit of a sour endeavour. Nandan Nilekani's unique identity program has some detractors, starting with the Planning Commission.